What needs to be on your one-page business plan? What is the key items I need to know? Let's nail this on one page first. And I think the process of doing this is more valuable than the one page you get at the end. I like to call the first thing your elevator pitch or your concept.
Okay. Number 2 is going to be, what are your top 2-3 products or services? We'll discuss that more.
All right. Then you want to think of who's your competition and the market. How big is the market and who's competing in it right now?
Perfect. Number 4 is going to be 4 pieces. So think of number 4 pieces. What is your variable profit per service or product? Like if I'm selling a sandwich, what's my food cost to deliver that sandwich, and maybe even the labor? Like what's my variable cost? If I open up on day 1 and I'm going to produce this product, how much is it going to cost to do that product? Number 2, your startup cost to launch. Number 3, what is your monthly fixed cost to keep the doors open? And number 4, your break-even point. And so we'll go through those 4 in a moment. That's your financial piece.
Yeah, and the next thing is, are you need to raise money? Do you need partners? What's it going to take to get this business off the ground? Are you bootstrapping this? Are you working at your day job? Is this a side hustle at first? We want to talk through that. What are your options there? And by the way, the first 4 questions should inform you when you get to 5.
Yeah. You got to do the 4 to get to the number 5. And then number 6, all right, what's your basic marketing plan? What is your differentiation or segment or avatar that you're going to go after to create market share? And again, all of these can fit on one page. That's the secret.
You want to have 3 things collide. If you can get these 3 things to collide, if you can get 2 out of the 3, that's good. 1 out of the 3, don't even do it. Okay, Let me go over the 3. First, is it something you're good at? You better be good at this thing because you're going to go charge people for it. So is it something you're good at? Second, is it something that can make you money? Okay, it's got to make money. And then third, is it something you like doing? Just because you're good at it doesn't mean you like doing it. And just because you're good at it doesn't mean it makes money. So you got to, if you can get those 3 things to connect though, that's what you should spend your time on.
Number 1, your elevator pitch.
Just for an example, like our law firm, KKOS Lawyers, it's the number 1 tax and business law firms for small business owners and investors. Say what it is and who you are serving. If you can at least get a couple of those components into your little pitch there, I think it's helpful. And that's like your opening statement. Mark, you've called it like the power statement before.
Yep.
When we went with our own lawyers, we're like, all right, who are we? And just thinking in our law firm, which has been around for a while, but it's like, let's really define like who we are, what are we doing, and who do we serve? But I think if you're in that elevator pitch, and go back to where the setup you had of you got in the room with Mark Cuban, you got 90 seconds of his attention. What are you going to get into? And I think as we go through some of these other points here about the top product and service, your competition, your price, and your marketing plan, that might go into this little 90-second pitch. So some of the stuff we're going to talk about, I think we'll weave back into point number 1. We had a nonprofit come by the office to talk about entrepreneurism, starting a business. They brought a bunch of kids into the office. And so I did a little thing about how Directed IRA was started in particular and how
the
company's
White House
grown.
tour.
Yeah. And they were in the office. We have a cool lounge where we were doing this, and it was packed with kids. And so I was kind of go over, how do you start a business, And I asked them, do you have a business idea? And this cute little girl, I mean, she was one of the younger ones in the room, maybe 12, raised her hand and she said, I want to sell vegan cupcakes because this girl has a lot of allergies and she loves cupcakes and sweets, but she can never eat them. And she's like, I'm going to go sell vegan cupcakes. And she knew her stuff. She knew there's other people that sell it. And so I started asking her a lot of these questions. How would you price it? Okay, how are you going to make money? How much do the ingredients cost? Who else sells this in your town? And she actually knew a lot of the answers to this question.
She had a problem to solve.
Yeah, she knows that for her body, her diet doesn't work for her.
So you've got your concept. I'm going to sell vegan cupcakes. I got to sell a hell of a lot of cupcakes to break even, which we're going to come to later. So I would like to see in number 2, what are your top 2 to 3 products? What did they be priced at? We'll get into break even later. I'm going to sell cupcakes for $3 a pop. I'm going to sell dozens for X, and I'm going to do catering for Y.
We've identified the product here. When you think about the product and the cupcake, you could say, well, when I make 100 cupcakes versus 1,000 versus 10,000, my cost starts going down. I start getting bulk pricing. Actually, as I grow and there's a certain number that I hit, I have more profitability in that business. In a service business, and this is particularly interesting, I think, for smaller businesses that are service-oriented, where the business owner is very much ingrained in it. You got less than 5 employees. A lot of your ability to make more money is, frankly, you working more. You are the service. You're putting in more hours and more hours and more hours, and then you're getting burnout. And so you got to be careful about that in the service business where you are the freaking service, whether you're mowing mowing lawns, doing someone's taxes or their legal work, or I don't care what it is, you can get trapped with that and start hating your life.
In services, you got to really know, how are you going to duplicate yourself? Because anybody that's going to invest in your business, or if you're going to do this, you got to run the business. If it's a service business, who's doing the work?
Yeah.
And you got to budget for that.
All right, let's get into competition. And I want to kind of throw in market too. Some industries are wide open. There's a ton of opportunity. Some of them are hyper competitive. And so we want to kind of look at the market in general. For example, is this a market that's growing? Let's talk about vegan cupcakes. There's more and more people getting concerned about that, more and more people doing that type of a diet,
for health
they have
reasons or
allergies
yeah.
or whatever it may be. And that market may be underserved versus a more just cupcake market in general, where you're not in a niche, so to speak. So we want to look at where you're at so you know where your competition's at, because this is going to inform the next thing, which is price. And also, what is the future growth of this business? My brothers, for example, one of their businesses is they do satellite TV installation. I don't know how much longer that business is going to be around. I don't know that they would start it from day one right now. I don't know that I'd go tell someone, you want to go install satellite TV anymore, right? That's a dying thing. Everybody's pulling the plug, or they're streaming and all that type of stuff. So where's that market going to be in 5 to 10 years?
I love how you kind of quiz that girl in the office tour. If you say, hey, my concept's this, and I'm going to sell these 2 or 3 products, they may ask you, who's your competition? That's really comes next. This girl goes, oh, there's only 3 vegan cupcake places in the whole Valley of Phoenix of 2 million people. I think it's wide open. Really? So I can't get on DoorDash and find a vegan cupcake? Nope, only 2 places in the whole valley. Okay, the end. That's what I need to know.
Some of these concepts, if they're very location specific, know the market you're going to go to. And we've had business owners, a lot of people over the years that have moved to a specific area for a local business opportunity, okay? Because where they lived didn't really need it as much as another place where they could move and go put their resources and time, because it was location specific.
First thing in the financial section is, and it can be 1 sentence, what is the cost to just open the door? I'm going to do cupcakes from home. My startup cost is not much. I need a few more pans. I need this. I'm going to start from home. Versus someone that's like, I'm going all in. I need a shop. I'm going to rent a place. I need to renovate. I have TI. I need ovens. I need this. It could range from $1,000 startup cost to $100,000 startup cost. I don't know.
You might have the vision of, well, I want to be to the storefront location, but I'm not going to do that all at once and put that pressure on me and my time and my money and maybe other investors I might bring in. That might be a little too much risk than I want to take. So maybe I start out small. There's a taco place I love called Backyard Tacos. It's in the East Valley here in Phoenix. And literally, the way that restaurant started is this guy just made tacos in his backyard on the weekends and had his friends and family over, and people just kind of pitch in. And enough people finally came over and like, would you start a restaurant already? This is freaking awesome.
I love that idea.
And he finally was like, okay, this is actually a business. Know that where you want to be isn't where you're going to start first.
Number 2 is, what is your fixed cost per month?
Like, you could be signing leases, you could be committing to vendors, you could be having
Xerox
payroll.
leases and phone, internet.
Yes, and so you're going to be on the hook for this. So there's no backing out of it. So you want to make sure you're good on that. One way I like to think about it, and just even like in the startup and venture capital world, like if a venture capitalist was going to come in and fund your business, for example, they're going to want to see what they call the burn rate. Okay, they want you to create a little model that says, these are my costs, and as I grow, my costs are going to go up because I might have some more
phase
payroll,
1 could be one, or
right, more materials, more product, more lease space, more whatever, more marketing budget, whatever it might be. But then you also are running, what's my revenue as I'm going quarter to quarter, or every few, you can even do it month to month, year to year, however you want to do it. But it's going to show the revenue hopefully increasing. So you want to build a little model for this, and don't overcomplicate this. You freaking do it on the back of a napkin, do it on a little Excel spreadsheet. Like, just pencil it out and know what these costs are going to be and how they're going to go up, but also how your revenue is going to go up.
What is your variable cost / profit for every product or service you perform? So let's stick with the cupcake. Now, I've seen some pretty expensive cupcakes and these little bun cakes and all that. So let's just have fun with it and say it's a $4 cupcake, okay? $4 vegan cupcake. Now, you might have a price for dozens and other things for catering, but let's say the average revenue per cupcake is $4. I'm going to say, what is your variable cost? Now, she's saying in phase 1, I'm not going to have employees. So I've just got this cost, this cost, this cost. So to produce that cupcake is literally just food cost. And she's going to go with a 50% food cost. So that means my variable cost to do a cupcake is $2. I'm going to sell it for 4. That means her variable profit is 2, which brings us to number 4. What is your break-even point? And you're going to take your fixed cost. So let's say her fixed cost per month is $1,000. She's got to rent the kitchen from her mom. She's got, what is her fixed cost? She's got to pay for a cell phone, a website, and a few things. She's got to sell 500 cupcakes to break even. See, 500 times $2 is going to give me $1,000. So before she can even take home any money, she's got to sell 500 cupcakes. Now, that's going to bring us to the marketing plan here in a bit, because I'm like, how in the hell are you going to sell 500 cupcakes? And pretty soon you're like, ooh, this is a harder business than I realized.
Here's one thing I think is important to add into this too is your time. How much time was it taking her to make that? How many cupcakes did you calculate?
500.
500 cupcakes. We didn't calculate that into it. That time could have been spent making money somewhere else. Are you making at least $15 an hour here? What's this cost of your time in the business too? Because that matters. And this is what some people miss at the end of the day is they're like, but I'm breaking even. But because you're not paying yourself. Or I made $1,000. Well, congratulations. You worked 40 hours a week every week that whole month. You made $1,000. Now I'm okay with that if you're like, but I'm investing, I'm building, it's growing, it's working, I'm getting more customers, I'm getting my costs down. So what I want to say is if this is going to be a real sustainable business versus a hobby, you have to know once you get that, that margin of what kind of your cost of goods and the materials and the fixed costs
labor,
you have.
whatever it is,
Factor in your own labor, because a lot of these businesses are going to start with you. You are the labor, but you've got to be able to replace yourself. You've got to be able to add people in to do that work for you that then you can focus on selling the product, innovating, growth. Maybe you're a backstop on some of this stuff or involved. Make sure you're calculating that into the equation too.
Number 3, here's my variable profit. Now you may say cupcakes are $2, but I'm going to sell cakes and make $4, and I'm going to sell wedding cakes and make $50 or whatever. So you have your top 2 or 3 products. What's my variable profit per product? And then you can start doing math. Oh, I've got to do 10 wedding cakes, 30 cakes, and 200 cupcakes. Okay, that's your goal to break even. And that's number 4. What's your break even? So your startup cost, fixed cost, variable profit, and break even.
Let's come back to price and how you're going to set price. Mark kind of ran with $4 here as an example. And I asked this girl that was in there, what does it cost to buy a vegan cupcake? And she knew. Says like $5.
Ooh, okay.
They are not cheap. If you undersell, maybe that's part of your strategy. You've realized you can make money and you're like, people are overcharging for this. There's an opportunity for me to still make money and get into the market. And sometimes that's a great strategy, is to be the low price leader if you wanted. You still got to make sure you're making money at it. So that's where you got to really do your numbers. What I want to say here is when you're thinking about price, I want you to think of 2 things. The cost that we were talking about to make sure you can make money, but also the market competition. Because if you run your numbers on cost and you're like, man, I got to charge $6 for a cupcake and all your competition's doing it at $5, good luck entering that market. You're the new participant and you're going to be the high cost provider of this. Maybe your cupcake tastes better than all of them, freaking better at $6. And so, but you're going to have a harder way to get into the market. So think of your cost in terms of, your price in terms of the cost, but also the competition in the marketplace. And honestly, this might be a part in your analysis where you say, the business doesn't work. Client owned a Buffalo Wild Wings, okay? And I went over their financials on this. It was very interesting. This thing made like $1.5 million a year. But when you looked at the financials, they broke down everything. They barely broke even. I mean, they made tens of thousands of dollars on the food when you looked at the break even. Where did they make all their money? The bar, on the liquor. If they did not have a bar in that frickin' Buffalo Wild Wings, it would have been shut down. But because they knew the margins on selling liquor, because we got these people eating Wild Wings and they want beer and drinks, that's the model. That's actually how they make money. So if you're like the cupcake store, let's say, that has a location, you might be really tight on your margins there. But you can sell them a coffee for $3 that might cost you 50 cents to frickin' make, because they know they're gonna pay $5 over at Starbucks for that. So think through the product mix that you might have and where you can actually make money.
Okay, now number 5. This is a short answer as well, is how are you going to not only come up with the money for the startup cost, but you need some reserves. You can't expect, like we've talked about, to be making money right out of the gate in every model. Sometimes you will, but you want to be able to say, okay, if I don't sell enough cupcakes in the first 3 months, do I have enough in reserve to cover my monthly hard cost? Do I have a reserve, and what do I need to raise?
The more you can control your own destiny, the better, of course, but also be realistic about your abilities to get this thing off the ground. I think one of the great things of Mark and I in our partnerships on things is, and he said this at the very beginning, which was find someone that complements you too in the business. You don't want it just another one of you necessarily. You fill that role, but find someone that complements you in that business. And that's one thing where Mark and I have had a lot of success, is we complement each other in a lot of areas. Where I have weaknesses, Mark has strengths. Where he has weaknesses, there's only a couple. The last thing I want to say on that is, and I think too many people skip this, is the bootstrap. There's nothing wrong with bootstrapping this and taking your time to build this.
Yes.
Like, do you really have this technology or this product that you got to get to market and you've got to get it out in the next 30 days and you got to raise money and you've got to bring in all these investors and partners? Or is this something you can build on and grow and bootstrap? You know, I think of Amazon and Jeff Bezos when he went out and raised money. Jeff Bezos went out to start Amazon. Remember, he was freaking selling books first. But you know, the guy took 60 meetings to get 20 investors that put in $50K each for $1 million. Okay, 2 out of 3 people turned him down on the best business idea in our generation. All right.
Yeah.
Now, they didn't have the foresight to know, but Jeff Bezos nailed it, of course, and he executed on it. It's a great story. Now, those people, by the way, that $50,000 investment was worth hundreds of millions of dollars right now if they would have held onto their stock all the way through till right now. But there's a couple important points, though, as you're thinking about building your business. And as you think of the Jeff Bezos and Amazon, because we all know it, we all freaking use it every day. One is it was hard to raise the money. He was twice as likely to get rejected as someone to say yes on the best business idea out there in our generation.
Yeah.
The second thing is he diluted himself 20% to get those investors. He gave up 20% of his business. Now, of course, you go back to him right now. Would he have taken that? If he didn't have to, would he have given up 20% of Amazon? By the way, this is like $1 trillion company now, right? This is hundreds of billions of dollars we're talking about here of this 20%. Now, you might have a lot of different zeros behind it here, but the principle still holds. Be careful about what you're giving up. We could look at it and say, it might not have ever hit. If he didn't get that $1 million to make that investment into the business, the servers, and the other things it took to actually execute on that business, it might not have been just a bookstore that died.
Now, number 6, the marketing plan.
The marketing plan can make the difference of whether this is going to work or not. And so many of you may have worked in an industry already. You're well known in that space. Maybe you've worked at a competitor. You're going to go start a business in that same industry. And you've built a network, you know, people know you. You got to tap into that. So think of the strengths that you have. Maybe you have a social following. Maybe you don't. Like, where are your strengths? And if you're starting at scratch, you're thinking, well, I'm just going to pay for Google Ads, or I'm going to do well, I mean, you know, I don't know what your concept might be here, but I like to start small, work with the things you have, the network you have, the connections you have. Those are going to be your most likely first customers. And if you're stuck on I don't even know, would my friends and family use me for this? Yeah. If they were the typical customer in this, would they use me? And if the answer is no, you might not be able to pull this business off. Your marketing plan is going to die right there. Whether you're running a marathon or a 100-mile bike ride or whatever, you know, if you don't love the process and the training, going and doing the race, you're going to hate it. And sure, you might get the excitement at the end of the day, and that's, you know, but learn to love the process of it.
Love it.
And let that be part of who you are as an entrepreneur or a business owner. It becomes part of your persona and who you are. If you get that and you love that, you can become unstoppable, because all of the challenges are going to be thrown your way. That's just part of the gig. That's just part of the deal. For any of you existing business owners, this is, I think, a good refresher to come back, walk your own existing business through this process here that we talked about. Please share those with other people. You got someone that's got a business idea that's throwing it down to you, share this list with you. And then the last thing, for those of you who are been wanting to start that business, it's been in your brain, take this list, get through that process, which I think is helpful in and of itself, but go talk to a friend. Go talk to some other business owner.
That believes in you.
Yes, that believes in you.
And will give you straight advice.
And will give you straight advice. Sometimes the process of talking it through is super helpful. Now, the caution on that I want to say is there's a lot of people that are scared that you go out and be successful. And so they're going to give you crap about this. They're going to tell you you're most likely to fail. And you know what? You're more likely to fail starting a small business than to succeed. But just like the man in the arena, it's on the wall here, Teddy Roosevelt said, you know, it's better to, or Shakespeare, you could say it. It's basically the point of both of those things, better to love and lost than to not have loved at all. Or man in the arena, it's better to have basically gone the fight, and even if you've had challenges and lost, than to be one of the, what does it say? The cold, timid souls who neither knew victory or defeat.
Thanks everybody for listening and watching. Please get down in the description below for the support you need. Get with the law firm when you're ready to pull the trigger to get the right entity, get the right plan, the consult. We've got a network of accountants that understand Main Street business tax principles. We've got so many podcasts and articles and ongoing support to help you succeed. We're not going anywhere. We wish you the best, and thanks for watching.